Good morning, traders. This is Anka Calf with Trade Out Loud. This is the pre-market game plan for today, Tuesday, February 11th, 2020. It is 8:36 a.m. Eastern Time. Before we begin, let's take a look at the economic calendar. We have President Draghi that will speak at 9 o'clock. We also have the Joe's job openings at 10 o'clock, and Federal Chair Powell testifies. This is day one, day two tomorrow. And this is pretty much what we have going on for the trading session, especially for the morning session. Now, let's take a look at the futures indices and see where we are heading into this morning. So obviously, going into the open, we do have one release, right? Basically, Draghi will be delivering a speech at 9 o'clock, so less than 30 minutes away, and you're seeing that the markets are consolidating. In fact, we had a push higher in the Asian session, and throughout the European trading session, we have been sideways. The breakout pattern is forming, and possible breakout over 370 to 375 can bring buyers back into this index to further push higher into a tradable void to 29,462, and we do have other projected targets above into 29,500, 511, 600, and 657. So we do have tradable void ahead. And also predetermined with projection targets. The risk for the trades for today's trading session, first off, if we are going to break above the 70 to 75 zone in the Dow, we're going to be using the risk into the 250 at the time of the trigger. Also, the mini S&P 500, also relative strength. We have a nice balance this morning with, I would say, an equilibrium of strength and sharp patterns. And finally, Russell is catching up. So this is very encouraging because yesterday I managed a little bit tighter in NASDAQ that I would have wanted because we were not seeing that follow through into Russell. In fact, the follow through in Russell came towards the end of the trading session. So back to the mini S&P, range bound overnight. Remember, we do have Federal Chair Powell that will be testifying today at 10 o'clock, and we have ECB as well. So this is going to, this is a breakout pattern. You can see it right here, resistance breakout zone. It is over 65. The risk for this pattern is going to be at the bottom of the pivot. Let me just rearrange this. All right, bottom of the pivot into the 54, and we're looking for further continuation higher close to the 70s, and we're looking into the 86 and 33.96. We're basically going into the void into the 3400, and that is the next projected zone in the mini S&P. No shorting at this time. We do have a lot of support, and we do have the 20 SMA that is right below this first minor support zone, and we also have a bunch of support that was created by price action actually on Friday's trading session, and obviously on Monday's trading session. So the directional bias is higher, pullback buys. We're going to be looking for pullback buys. If any short patterns should emerge out of these within this context, I will be delivering to you trades via our private Twitter feed. All right, so let's move on to NASDAQ, which is the showstopper and incredible strength. In fact, right now leading with 0.37% to the upside. It continues to be the leading index even in today's trading session. Pattern easy breakout again over 84. Well, we can see higher prices going into 9,600, and we do have again projections all the way into 63, 96.63, 96.80. And so the risk for the trade at the time of the trigger should be considered the 36 zone. We also have another support zone into the 94.62. So if this pattern is going to fail as a breakout, we're going to be looking for very short term to the short side for a possible retracement back into this minor support zone. All right, so let's continue with Russell. Russell was lagging yesterday, and it was creating this little peekaboo high going into 11 o'clock, and then it went back into the range. So it just took a very long time before it broke out. In fact, you know, it was the only index that wasn't breaking out at this point. I was a little bit concerned here because of the pattern, because into the open, we tested support and then we went back up, and then all the other indices were breaking out. We're having such a good rally and follow through. And Russell was a late bloomer, started to pop after 2 p.m. Eastern and continued to rally into the minor support, into the 76. And then now in the overnight trading session, we do have support into the 70, and we do have resistance into the 76 all the way to 77. So any break over the 77 area can bring higher prices into the 80s. It's going to be a gradual move to the upside, but this is very encouraging. So we are still respecting the overall very, very bullish pattern, even though we are more sideways than than the rest of the indices that have already created new all-time highs. But definitely we're onto the right path. So we have our low and we have our higher low here that was created on Friday with the pullback. So Friday, we have a pivoting effect. You know, the price started to digest, and it took a little bit longer because it is a bit more complicated. The pattern is a bit more complicated, so it had to digest this prior cluster from Tuesday and Wednesday, and then this prior cluster from the prior week. So we did have a lot of elements that were pointing out to a slower and more gradual push to the upside. So again, once we break over this 77 zone here, things are going to start looking better. We still have some clusters of resistance. You can see from the left hand side, we have this cluster right here, and then we have this one right here from prior weeks. And once we digest, and I think that one of the reasons why we're stabilizing here as well is obviously the economic releases that are pending, and also the fact that we're into this heavy congestion zone. So once we clear this heavy congestion zone, we could see further advancement into 80. It's not going to be as clear as NASDAQ or the mini S&P or even the Dow, but it's still going to be a gradual push to the upside. So it is on the right side of the trade. All right, we've been talking about gold, and gold is hovering into that line in the sand into the 75. And let me just put this on. We have it here. All right, here it is. So we have the levels. All right. So I called this yesterday the line in the sand because it was just coiling around it throughout the overnight trading session, and as gold only does, it pulled back. It broadened, let's say, the formation, right? So it made a new high, made a new low, but basically testing this support zone, which is into the 65 to 67. So this is the area right here. So as long as this is holding, you know, and as long as we're having that break over 80, the break is still over 80. So if we're getting the break over 80, this is still going to be a strong buy with targets into 83, 84, 90. This is short term. And then if we blast over 85, then we can see our higher prices into 90, 95, 1600. Like I mentioned before, I would like to keep a small position of gold for long term. So this more investment type of trade. Active investing type of trade. So I'm going to keep it. I'm already legged in. So I haven't done any adds to the trade. So I'm with a very small lot, but I'm still looking for a continuation higher. So far, we are still promoting the uptrend, and I'm going to just go very briefly here to the daily chart. So we have the low, higher low. So basically we're in the context of a really nice rounded bottom here, and then we had the lift, pull back, back up again and back into the establishing support back into the 50s, which is also psychological at that point. And we are still trading within a daily pullback buy, going back up into the 80s. So a blast over 80, not only that it will clear this prior high, and actually these highs right here. So obviously we have been stalling here for quite some time, and once we find a balance, and we're going to start pushing higher, things are going to look much better. So like I said, you know, we had a webinar a couple of weeks ago, and I was talking about gold and the projections in gold that may run into the 1700s and even into the 1720s. So that is for the longer term. All right, last but not least, let's take a look at oil and see where oil is heading this morning and what is our game plan for oil at this time. So we do have double bottoms, or actually triple bottom if you take into consideration the low here that we had on Sunday from the gap down, shallow gap down. All right, so we do have support into the 49.30s, and as long as this level is going to hold, we could see maybe a little short squeeze going into $51. Definitely a short under 49.30, and we could be cautiously bullish above this resistance high right here of 50.60. And targets, small targets, let's start with small targets: 50.75, 50.80, 50.90, and $51. We have the descending 200 SMA right here along with cluster of resistance, and if we don't manage to break entirely over this $51 level, things may go back south for oil, and price might get rejected at this point and get pushed further lower. All right, let's bring bonds. Okay, so I don't typically, you know, bring bonds, but I think that I love the context in which they're trading right here. So if we get a break over 162.20 23, this is going to be my level of breakout right here. We could see a further continuation higher, possibly going for a void fill into the 163.05. So 163 to 163.05. The risk for the trade at the time of the trigger. So if we're going to get that that 162.23 or 24, that would be the breakout point. We're going to be using the 162.05 as a risk, as a stop level for this trade. All right, this is all for today. See you tomorrow for a brand new pre-market game plan video. Till then, have a great and profitable rest of the day.